Hey guys, this is the market update. Some absolutely wild things are happening behind the scenes in crypto, which we're going to look at in this video, including this firm right here called Genesis. They're one of the absolutely massive lending and borrowing institutions within crypto, and they control a ton of liquidity. And they've just come out with news that essentially they may be insolvent as well. Hundreds of millions of dollars tied up with the FTX debacle that they now can't take out of that exchange. So let's go over this and how it may affect crypto and if they can actually get out of this hole. So we'll go over the Bitcoin price first, links in description and timestamps and everything if you want to skip ahead. This is the Bitcoin price now at 16,800. Now I want to highlight the previous dumps that we've had. This is the Luna debacle right here, as you can see. Then we have 3AC blowups in Celsius. And this is the FTX debacle for right now. Now, as you can see, if we look at the drawdowns from each of these, we're looking at around a 32% drawdown for the initial Luna crash. And then really it was 3AC and Celsius, which was a really bad one at 43%. And now we're looking on the FTX debacle right here at 24%. So in fact, given all of the headlines are much worse than the actual price action here, given the fact that $8 to $10 billion has been completely wiped out. Now, that's not to say we can't go further because of the ramifications of FTX. So we have to be really careful about this because if other things start coming out, there could be even more pain. In terms of prices right here, we're actually setting, some sort of consolidation here off of that low that we got to. But, if we get further sell-offs, if Genesis can't raise funds and a lot of other hedge funds that have money with them, they get tied up and that liquidity dries up further, then we're looking at other levels on the chart. And now we really don't have other levels right here. The next level of any sort of confidence is right around here, which would be around, let's call it 11,500, 12,000. I'll put a box here because, to be honest, I think we find, support levels around round numbers, so 15K, 14K, and so on. And so I believe that a lot of this is, trying to get priced in a little bit more because the real dump was 3AC. And Celsius and all that lot blowing up. This one has objectively been not as bad so far, but could get worse down the line if Genesis can't raise capital. So there's some consolidation that's going to be happening around this level, but it's not trading on technicals, it's trading on what's happening with these firms. So let's get onto that. If you want to get a deposit bonus, if you are a short-term trader, do a deposit bonus, check that link in the description. But if you're investing, put your money in your cold wallet, of course. Genesis are one of the largest lending and borrowing arms. And that's bad because they have money tied up and they essentially said that they were insolvent a few days ago. They came out. Here is a thread, I'll try and link this below as well, that goes through why this is such a big deal. For those who aren't familiar with Genesis, it started as the first OTC Bitcoin desk in 2013. It's part of Digital Currency Group. DCG are massive and they own many top institutions, including CoinDesk, I believe, which is ironic because CoinDesk broke the Alameda balance sheet story, which led to all of this. That's not CoinDesk's fault, of course, it's FTX's fault, but you can see where they have money. CoinDesk, Foundry, Genesis, which are a massive market maker and trader, Grayscale, which have the Bitcoin Trust. I think that's a separate trust, so the owners of that trust shares will actually own that and not Genesis. Luna as well, which was the consumer-facing passive income and yield application. They also run a huge VC firm. Check out these 2021 numbers. 50 billion in loan originations, $50 billion, incredible. Total active loans is 12.5 billion, spot volume 30 billion, and derivatives notional value 20 billion. Now, Genesis were a massive investor in 3AC, as you can see here. Genesis lent $2.4 billion to Three Arrows, taking a massive write down, as you can see. Genesis then filed a $1.2 billion claim against 3AC. DCG, which is the parent company, stepped in to essentially write off over $1 billion. Since then, their numbers have fallen. This is potentially some slightly better news in that a lot of deleveraging has already occurred, loans being paid off. And so as we can see here, the loan originations is 8.4 billion, but the total active loans around 2.8 billion. So, let's say that's completely written off. That's another major blow, but FTX was 10 billion. And so, we may be seeing smaller ripples here. That's one potential ray of light if they actually can't raise funds to redeem their solvency. Why is this a further blow though? Well, as you can see, Genesis are actually the back end, the institutional end for a vast majority of these yield platforms. So think of Gemini and Celsius and Luno and the others. They were all using Genesis, right? So they would just give the Bitcoin or the US dollars to Genesis. Genesis would give them a yield of whatever it was. But what Genesis are doing is lending that value out to market makers and hedge funds. Obviously, 3AC went bust. Market makers shouldn't be going bust if they're managing their risk properly. But as you can see, Gemini also stopped withdrawals because they were putting that money with Genesis. How does it work? Gemini give to Genesis. Genesis loans to a crypto fund. Fund borrows from Genesis and pays whatever plus 2%. Genesis gives that back to Gemini, who take a little bit of their cut, and then Gemini gives that to you. That happens for many different firms, including Celsius as well. So if the hedge funds go bust, that yield goes, but also all of the money tied up as well, which is where all of these insolvencies happen. Beyond that, nearly every whale I know that plays in crypto gives money to Genesis. Instead of using the consumer-facing applications, family offices and institutions give directly to Genesis. That is why Genesis halting withdrawals is so bad. They sit at the direct center of crypto capital markets. They custody funds, they help institutions earn yield, and the yield product for CeFi platforms. From what I know, the Genesis yield arm is a different separate company to the other arms in the institution that they have in terms of the market making arm. So it is just Genesis, but it looks like they're trying to raise $1 billion here over the weekend. That's kind of make or break. If they manage to do it, then we could see some more positivity flow into the markets. If not, then we just have to assume some negativity and chop is, going to happen over the next few weeks. Now, you might see some exchanges that offer yield products as well. It's important to understand where the exchange is getting their yield. Some use Genesis, but not all. In fact, Binance came out this week and said they have absolutely no exposure to Genesis and they don't put any money with them. Other exchanges are the same. The way that they actually earn yield is by using it on the exchange. So futures traders and margin traders will pay a funding fee to trade in those markets and borrow liquidity, and they will pay a fee for that. And so investors on that platform can actually give them the money, the traders the money, on an over collateralized basis. Traders pay, let's say, 8-10% per year as an interest. That's all over collateralized, and that's within the system without any excess risk. If the traders lose the trade, they have collateral there to pay for the trade and everything like that. Now, if the app you're using doesn't do that, then it may be using Genesis, which you have exposure now to essentially a ton of over-leveraged hedge funds who are all going insolvent. So that's why it's important to understand where you're getting your yield from and where the platform that you're on gets its yield. And yeah, for sure, if you're unsure, then take your crypto off the exchange into your own wallet. Now, if you own Bitcoin or crypto that you're holding in your wallet, none of these insolvencies matter if you're a long-term investor. You can just wait until all of these centralized companies literally finish blowing themselves up, and then the bull market can continue, right? After everything is out in the open, we get some regulatory clarity, probably next year at some point, mid to late maybe. But as we can see here, this is just normal for BTC. The realized price drawdown is still making a higher low right here. So very normal in terms of drawdowns and bear markets for Bitcoin. We are right here. And for long-term investors, this is probably a dollar cost average zone, as you can see. We can also see here, this is the pure multiple. There are many different multiples right here, but whenever the pure multiple, the orange line gets in the green zone, has been historically a great time to buy, as it's been right in the middle of a drawdown. You can see we're bouncing around that level again. This doesn't say how long you'll be in a drawdown, how bad it will get, or even worse. It just shows you a various level where it's definitely not in peak buy mode or bull market. And so long-term investors obviously potentially look at these areas to pick up. Also, we have here minor balances, which I think is important to address. They actually don't have that much Bitcoin left to sell. I don't think this is going to be a major problem. As you can see here, it was actually miners that sent us way down after the FTX disaster. 8.25 thousand Bitcoin was sold essentially in a market order, and everything just got trashed. You can see that here, a massive drawdown, actually one of the biggest ever drawdowns from miners. And so they were almost, solely responsible for this drawdown. I wonder where this would have gone without them selling, but they were definitely sellers right here, as you can see, and they forced us down to this level that we're currently in. We can also see as well that we're right in the point that implies aggregate miners are distributing their coins. So not only are they selling all of the coins that they are mining in aggregate, there may be some that are not doing that, but in aggregate, not only are they selling the total supply from mining BTC, they're selling more than that. Okay, so there's a massive amount of supply from miners that are coming on the market. The hash rate is going up to the moon as large players come in, like Russia themselves, who said they are mining Bitcoin right now. You also have ConocoPhillips and Shell coming on board. These guys, they're going to mine Bitcoin as a plaything. They don't care about the money because they can just put these miners directly on their rigs, right? Other small miners are just getting absolutely trashed right now. Welcome to the free market. As you can see here, they're selling down their Bitcoin even more than they are mining. So there is just a lot of supply that's coming on the market as these miners capitulate, and basically their businesses are just in a terrible state right now. So the market has to absorb all of this supply. It's supply and demand at the end of the day. And so we are in this position now where I think, you're just right at the depths of a bear market where everyone's capitulating. And if you have any, dollar cost averaging in mind, just to keep chipping away, making sure that your P&L on your balance sheet is good, whereas everyone else's is blowing up. Bitcoin is absolutely still within a downtrend, consolidation downtrend right here, as you can see. Now, if you look at some altcoins like Ethereum, BNB coin, Polygon, they're actually not in a downtrend. They're actually making higher lows even during this drawdown. And that's because they have, fundamental adoption that's happening there. So everything's different. It's going to have a different price reaction depending on the network. So check those charts out as well, because they're very interesting. If you are a trader, get the deposit bonus on BitGet via the link in the description, but take your investments on chain to be the safest. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.